Hey everyone, me Kevin here. Welcome to a Q3 HouseHack update. Here's everything that you've got to know. First and foremost, in quarter one and quarter two of 2024, we found that multifamily still had some life in it in terms of getting great deals, but housing inventory really plummeted in the first and second quarter. So we preserved about 20% of our capital for acquisitions for purposefully waiting for that summer inventory to start stagnating in Q3 and Q4. Many of you, especially if you came to the roadshow, you heard me talk about exactly this. So while we did acquire multifamily at the beginning part of the year, and we've got quite a few excellent buildings, our overall focus is getting really good deals, no matter where the deals are. And we're finding we're finally getting back to an environment where single family is turning into a deal again. This is because we've seen inventory levels rise throughout the summer. Now we're about to go back to school, and that's when buyers drop off a cliff, especially back to school combined with going into an election cycle and then Thanksgiving and Christmas and the holidays and New Year's, whatever. We think you're not going to see a lot of buying competition until about Q1 of next year, which means we have what we believe is an excellent buying window before really the effects of interest rates falling come into the market. We really think Q3, Q4, and Q1 will be what we call the buy window. And so we are looking to acquire as much real estate as possible at a great deal in this window. So that's what we're doing right now. We've just started acquiring properties again in Q3. Just this week we began, and we're really excited to keep buying. So of the about 50-ish plus minus million dollars that we raised, we saved about $10 million on the sidelines so we can go acquire more real estate. The existing real estate that we have is also in the process of being appraised and valued by independent third parties, and that'll be very important for the next steps of the company. So that's a quick update on what we're doing with funding. We won't spend all of our money because obviously we want cash available just in case there's a recession or something weird. We want to make sure we have runway. Though we're not heavily worried about that, because if there is a recession, we think rates will mostly just go straight to zero. And if they go straight to zero, frankly, we think real estate will do well, especially in blue states. Right now, the latest estimates on blue versus red state pricing is that red states like Texas are starting to see some year-over-year drops in pricing, whereas those blue states where they underbuilt homes, we're seeing rising prices. This is probably because states like California bottomed out and we haven't seen that normalization of post-COVID effects hit markets like Texas just yet. So our plan has been consistent since day one, which is we start in the West Coast, we move over to the East Coast. Nothing has happened with that. We also start with wedge deals. Nothing's changed here. We buy wedge deals, we buy great deals. And we do that starting with the West Coast, build out the systems, the staff, the property management, the construction teams, and then we move East Coast. Very simple. So nothing at all has changed with the MO for the company here, which is fantastic. It is working really well. Really, we want to be that company. I want to be clear for the SEC watching, none of this is a solicitation. There's no offering related to this. We're not trying to raise money. This is simply an investor update that we're posting on our HouseHack YouTube and wherever else we post our HouseHack updates. So nothing's changed here, but our view is that we want to be able to take a dollar and deploy it into real estate, something that we think is a stable, this is our opinion, right? A stable and low risk asset, and really have that dollar almost instantaneously be worth $1.20, maybe $1.15, something like that. We want to take that increase in equity and that original value and compound the growth for this company very, very rapidly. Nothing's changed. We've still taken on no debt, and nothing's changed. HouseHack is still paid zero of the plain expenses that I use to get around. So this is really good. So we're pretty much, everything's pretty well consistent. We're just back in buy mode, but there are some things moving in the background, not all of which we can go into heavy detail now, just because there are rules that specify what we're allowed to say and not say. But anyway, what I'd like to explain sort of the next phase as, phase 2 we call it, is really refining now and perfecting. And this is really what we've been doing in the quieter time of the second quarter, as well as now in Q3, even though we're back in buying mode. We're continuing what we started in Q2. We're focused heavily on phase 2. And we think what we've found now is what we're calling the golden path. And so this is basically, how do we scale wedge deals across the nation, but do that in a way that benefits the company the best and investors the best? So there were a few ideas that we had. One of the ideas which we thought would be very desirable was a mini fund model, and we might still take advantage of our mini fund approach, especially for things like Delaware statutory trusts. But Delaware statutory trusts are one heck of a legal endeavor. And that's not to say we haven't gone down the road of talking to attorneys about this, but we do believe some of these items, for example, you may have previously heard sort of the M1 idea, the DST ideas. Some of these ideas, which were really tools for additional liquidity, might not actually be the best. See, we're not raising money with debt. We're taking cash and we're growing that cash. That's what we do. And so we've been looking for what is the best way to maximize the growth at HouseHack and maximize shareholder value. And so we think, while these will be useful longer term down the road, we think there's a golden path. And that golden path is broken into being the absolute best at the following. The absolute best wedge deal acquirer in the country. Like, we want to essentially, with our ability to acquire great deals, sorry, Open Door, but we think our model will probably bankrupt Open Door. Again, sorry, Open Door, we just think our model is way better than yours. We think we can pay more than you and yet still make more money for you than you. So sorry about that, Open Door, but that's okay. They might still have another 10 years, maybe 5 years before we get there. So we want to be the best wedge deal acquirer. Then we want to do so in the most tax efficient manner. And see, we've been talking to a lot of tax attorneys, and there's some really cool ways we can take some of these visions and make them even better. And you'll see this all comes down to one path. See, again, we started with this idea of the wedge, and that's sort of broadened out into, there are a lot of opportunities we can use to make money. And you're going to find this all peaks down into one mission, and it's really, really incredible. But anyway, best wedge deal company in a tax-efficient manner, and in a manner where we have the most control possible. So this is going to be, think in-house services. So what we want in-house, these are some of the things we're going to want. Well, we already are a broker, as in a real estate broker, right? This helps us get access to houses, MLS listings, comparable sales. It's easier to work with agents as a realtor. It's incredible how many doors being a broker opens us up, and we licensed HouseHack as a broker. In-house property management. This is huge. Building our own property management infrastructure allows us, as we're building this out, but it will, as we finish building this out, allow tenants to essentially use their phones to verify their identity, to upload their social, to upload their driver licenses, all through an API we can build in directly with our HouseHack app. And it makes screening even easier for us, as well as allows us to remotely unlock doors and help tenants get self-showings, which is huge. These are really, really cool and really big in the property management space, and almost nobody's doing this right now. Then this obviously combines with having our in-house software team. Obviously, we've got our in-house contracting, which this will be very important in just a moment. You'll see why. In-house legal, which is really also critical. I mean, we took over a property. This was not a tenant we placed, but we had to deal with an eviction. And our in-house legal absolutely crushed it. We won the court case, we won the judgment, we won the wage garnishments. We even offered these folks thousands of dollars to move out to make the process easier. and they refused, so no problem. We didn't place them. We didn't have a relationship with them. We tried. We really tried our best to help those tenants out. We offered them moving funds. They just refused. We're storing their stuff in storage right now. They got another couple weeks to come pick it up, I think, roughly a couple weeks. But anyway, maybe it's less than that, but we'll see. Anyway, so in-house broker, property management, software, contracting, legal, this is all in-house. The next thing that goes in with this sort of in-house mix, and this is where we actually need your help if you've got a reference for us, is we want to hire our own in-house architect and in-house engineer. That's going to be a structural engineer, so let's be clear about that, structural engineering. And we think with these in-house tools, rather than trying to grow multiple different entities, we're only going to focus on this pinpoint, growing HouseHack. That doesn't mean in the future we can't take some of these ideas of the mini funds and DSTs, but the complexities, the legal complexities of these have made this a substantially better option. This does also mean some of the goals that we have had for, like a 2028, 2030 timeframe, for some of our longer term visions might be substantially accelerated. And so we're extremely excited about that, but and obviously we can't make any guarantees in this video. Again, this video is not an offering, it's not a solicitation, all of this could be wrong. This is just a transparent CEO to investor communication here. Mind you, I still have paid myself $0, and this, I think people get confused. They're like, how come HouseHack isn't paying for the plane? That just seems weird. How come HouseHack isn't paying you a salary? It seems weird. I really think there's a lot of, unfortunately, short-sightedness in America. See, I look at HouseHack not as a short-term investment like, oh yeah, let's do this for a few years and do something else. Everything I'm doing is going into making this the most valuable company, including the broker-dealer that's different from real estate broker, including the FINRA-licensed broker-dealer that has to do with the stocks world and that. We expect that, and the advisory firm, also separate business, we expect those firms to actually help HouseHack grow. So it's all part of one grander vision of helping people build wealth with exposure to real estate, where basically we're doing the work for you. That's the idea, right? Of course, there's risk with every investment, risk for loss, whatever. Again, this is not a pitch. But I look at HouseHack as, who cares that, HouseHack is a $100 million company now? That's cool. But that's not what I'm here for. The goal isn't to make this a $100 million company. The goal is to make this a $100 billion company at some point. That's what we're trying to grow towards. So in consultation, really, and this has been a lot, but just to give you a sample of some of the consultations that we've had, we've been in consultation with investment banks. They're called IBs. Been in consultation with underwriters, with market makers, with appraisers, with attorneys for board structuring, attorneys for tax structuring. And there is a lot, and we're paying these folks for their professional insight and their professional, Kevin, you should do this. And all of them, in my opinion, from my recollection as I make this video, my belief is that they're all pointing us to the same exact direction. And see, I like to believe that we hire people for a reason, that we hire people to give us their professional opinion and then help guide us into the right path. And so we think we found it. And that's why we're calling it the gold path. And the gold path is all about making HouseHack the absolute best it can be. So again, we're the best landlord in America. That's the other thing we want to be. This is going to take some time, but we'll write it up here. The best landlord in America. Yeah. Then we follow the gold path, wedge deals, tax efficient, in-house, real estate broker, property management software, self-showings, legal, architect, structural engineer. If you are or know somebody interested in being an architect or engineer, please email us at jobs@meetkevin.com. I'll write that down over here. We'll offer relocation, competitive salaries. This has to be in person. Please no remote. Jobs@meetkevin.com. Send me a resume and a 60-second pitch video. So if you're interested, architect and engineer. And then after this, we are going to move into something that we're going to grow into very, very slowly. But in addition to these items that we mentioned here, we've talked about this since day one, but we haven't been aggressive about this yet. But we are going to slowly and softly and very carefully get into, this is a very big word, development. Now, the way we're going to start this is most likely with ADUs, which what's interesting about this is we've mentioned that since day one, that we'd be open to moving some wedge deals to their highest and best use. We've just found that's not going to happen without an in-house architect. T, would actually be nice to spell that right. Architect, whatever. And then we get into other developments in the future. Well, that's all down the road. But I think baby steps to getting into dev or ADUs. One thing that we found interesting, again, none of this guaranteed, is that the compounded annual growth rate since IPO for companies like Invitation Homes and American Homes for Rent was about 7.5% per year. That's 7.5% per year since they IPO'd. The compounded annual growth rate for development companies like Lennar, Toll Brothers, whatever, was closer to 14 to 15%, so approximately double. So we think we can, frankly, we think we know we can do it all. We just want to be very careful and conservative. You know, this isn't like day trading YOLO lottery ticket options. This is like, how do we turn this company into a massive company for sure in the most conservative way? As far as equity at the company, it's worth noting that once we fully deployed this 50 of cash approximately, we think it's going to be worth about 60 in real estate, so about 20% or so, which makes it easier to compound and grow going forward. Obviously, the company's going to have had expenses, you know, probably somewhere in the neighborhood of 2.5 mil or something like that, depending on how some of these other fees turn out. So we'll see. But anyway, the rents are going to be lower, which is just what we're getting from properties. Rents are going to be lower than our operating expenses as we expand. But again, I've said this for a while, we're very overstaffed for the size we are now. If we just wanted a $100 million company, we wouldn't need this staff. We wouldn't have all this going on. But again, we're going for 100B, not 100M. We're thinking big versus small, but we want to do that in a conservative manner and take our time with it. So this is pretty big. So we've gone through a market update. We've talked a little bit about some of the goals of the company, the path. We have talked a little bit about income and expense and our deal strategy. The only thing we really haven't touched on here is liquidity. And this is really a topic for a different video, but obviously once we stabilize the next batch of real estate, you know, that might be when we look at sort of the next phase of fundraising. But we really need to prove this first and then value the portfolio so that way we could show, look, you know, here's what we are, here's what we're doing. So I would stay tuned for that. You know, right now shares, as of our last fundraise, I mean, it could be worth more now. I mean, things could fluctuate, but as of our last fundraise, shares are worth $2 a share. Makes the company roughly a $100 million company. And we hope to accelerate that in our next fundraise. Again, this video is not a solicitation. It's just a company update of our goals. So hopefully you found that useful. If you did, consider sharing the video with anybody else you know that's interested in HouseHack updates. Make sure you're subscribed. Hit that notification bell for updates. If you have questions, email us at ir@househack.com. And remember, if you know a licensed architect and licensed structural engineer, 2 separate positions, send a message over to jobs@mekevin.com with a resume and 60-second video. Thanks so much, and we'll see you in the next one. Goodbye and good luck.